This ends every Bitcoin bear market. No, really. Let me give you the context. Not the 40K print that the 4-year cycle bros have been calling for months. The Korean stock market just dropped 45%. AI stocks that were the trade of the decade got cut in half. The single biggest unwind of leveraged tech positions since 2022 just happened in real time. In fact, this was the worst sell-off for high beta stocks of the century. Yeah, even worse than 2000 and 2008, if you can believe it. And guess what? Bitcoin didn't flinch. No dramatic new lows, no cascade liquidations. The most severe risk-off event of 2026, the one that was supposed to be the final catalyst for the bear case. Nail in the coffin for the bull. Came and went. Bitcoin held above 60K. Bad news is not driving the prices lower anymore. We've run out of sellers. Now that's either the most bullish thing that's happened in this cycle so far or the quiet calm before the storm. I know which one I think it is. And the data behind it could be the most complete picture of a bear market ending that we've seen in a while. Right now, the bodies are piling up and people are going to point to that and say, that is the beginning of the end. No, it's actually the end. Bullish. 99 crypto companies have officially declared bankruptcy in 2026. The real number's probably double that. The quitters who shut down without a press release, who sold their Bitcoin to cover payroll, who just stopped showing up. Some of them have Telegram still active, but huge amounts of companies are gone. Digital asset treasuries, remember those? The hottest thing in 2025. Most of them are done. Stocks down 99%, companies closing entirely, some are liquidating the Bitcoin holdings on the way out. And the classic, of course, signal for an end of a bear market, exchanges closing. We saw BitMEX, Sendex, and Bitmart all close. These were all once top dogs. 2017, BitMEX was the place to be for trading Bitcoin. Bitmart was a top 10 exchange, Sendex was huge. All bankrupt, all shut down. Sounds catastrophic, but is actually the mechanism by which every bear market ends. All these forced sellers exiting permanently removes selling pressure from the market. All these bankrupt companies, good. We're purging the weak balance sheets. We're purging the leveraged players who couldn't survive. The businesses that only worked when prices were going up are getting washed out, and that's a positive thing. What's left when the purge is complete is a market held entirely by people who choose to be there, by the strongest players, the strongest apps, the strongest exchanges, long-term holders who survived the drawdown and didn't break. We even had a cold wallet hack. The cold card wallets have been exploited with losses over $100 million and climbing. Bitcoin still did not move under 60K on this news. By the way, if you're using Ledger or Trezor, you're safe. Cold cards just uniquely sucked. They were stupid in the way they set up their phrases. But anyway, different story. Look, right now, long-term holders are not selling. Record whale accumulation is happening. The long-term holder, short-term holder realized cap ratio is sitting at 3.9, approaching the historical threshold of 4 that has marked major cycle bottoms in every prior bear market cycle. Capital is concentrating in the hands of people who have demonstrated they don't panic sell, they panic buy at the bottom. That's the foundation that every recovery is built on. And then you have Tom Lee out here calling this at the bottom again. But here's what genuinely surprised me when I actually looked at Tom Lee's actual track record on bottom calls. Got the jokes kind of right themselves. He should get himself a YouTube channel, man. I'm gonna make the joke, but the punchline is more complicated than the Bears wanted. There's a specific reason why his call this time feels different from the other 6 times before it when he's called for the bottom. Let's be honest about Tom Lee's bottom call track record because it's an important context. August 2025, bottoms in, Bitcoin drops 13%. October 25, bottoms in, down 25%. November 25, bottoms in, we're down 16%. January 26, bottoms in, go down 35%. March 26, bottoms in, down another 12%. May 2026, bottoms in, down another 29%. 6 calls, 6 drops. You might say, shit, we're going to drop again. Tom Lee's saying the bottom's in. Look, this man is not a market timer. And yet, he'll be right eventually. The bottom will be called by Tom Lee, and then it will actually be the bottom. And everyone who used his track record to dismiss the signal will have missed the entry. The question isn't whether Tom Lee is a reliable bottom caller. He's obviously not. The question is whether the underlying data he's pointing to, the long-term holder accumulation, the forced seller exhaustion, the on-chain metrics, is more informative than his timing. And the data is increasingly hard to argue with.
Look, before you go, if you've been watching these videos and wondering what to actually do with all this information, the inner circle is the community that you've been looking for. This is our investor community where we solve the problem that every investor has, not knowing how to trade the narratives. What do you invest in? What sectors are hot? What good entries should you make? We give you specific long and short trade ideas, in-depth research reports on high conviction tech stocks and crypto before they move, AI tools that give you an edge most retail investors simply don't have access to. We are a research and data-driven community designed to give you the edge that you need. You get a 7-day free trial. The link is right below. Come find out what you've been missing. Your community is waiting for you.